first thing, this is why people came, the 8-pillar thrillers out there. The first company is...
I like 8-pillar thrillers.
8-pillar thrillers?
Yeah.
This is... what the ticker symbol is UIS. This is Unisys Corp. Paul, what do you know about this?
I know nothing about them. Pennsylvania IT company, outsourcing solutions technology company, builds security-centric solutions for clients across the government, financial services, and commercial markets. Okay, $1.6 billion company. I need to make this a little bit bigger, don't I?
1.6 billion is the market cap.
Okay, 1.6 billion. Look at this PE, Seth.
What is it? It's got to be less than 20.
1.8. This is almost the lowest we've ever seen. We had that one with Geo that was like 1.6, remember?
Yep, that's right. That's right.
This is 1.8. Now, guys,
1.8.
when I see this, I don't immediately think to myself, I gotta buy it. I think to myself, okay, why is it 1.8?
Yeah.
This is insane. What could have happened is maybe they sold a one-off division, had a big gain on it, or is it really, I don't know what the reason is, but that's an immediately red flag for me in a bad way. Like, this is what I'm telling you when I tell people I'm a value investor. It doesn't mean I just look for the cheapest. Value is what you get, price is what you pay. I'm looking at this saying, okay, we got to figure out why this is so cheap. Net income over the last 12 months is 900 million on 2.7 billion. Check mark. That's about a 33% margin. That's really phenomenal.
Wow, 33%. We usually want above 10, folks, but 33 is pretty phenomenal.
So we have 2 checks so far, and by the way, no dividend. So 2 checks so far. Very strong. Let's move on.
Okay, pillar number 3 is revenue growth over the past 5 years, Paul. Revenue growth is pillar number 3.
Let's go to the rev growth of the last 5 years. You ready, kids? 3.015 down to 2.95. That's an X. If you notice, they don't have their 2020 data in yet. So it's not in quite yet, but so far it is an X on revenue growth. But remember, guys, that could be why they're cheap. Everybody goes, oh, they're not growing. I mean, they did $4 billion in 2010, and they did $2.9 billion last year. That's a 25% drop over 10 years.
How about profit growth is pillar number 4, baby cakes. Can I call you baby cakes?
You're welcome to do that.
Go ahead. Smoochie.
Minus 110, minus 17. So it is a check mark. This is weird. Okay, so they got some big jumps here. This is a check mark, but they just lost less money. I don't really like that very much.
No.
Let's see what they've done in the last 12 months. You mind if I look at that stuff?
Sure. Look at the big buildup, and we're at 3 checks and 1 X. We suddenly turned the corner.
The last 12 months, their revenue is what is going on here? This is interesting.
Go on.
If you look at their quarterly numbers here, income from discontinued operations. Look at this line. This is what we learn here on Everything Money, guys. This is why it's so important to look at the financial statements. This is exactly why. I love the fact that we saw this.
Keep going, baby.
Income from discontinued operations. Discontinue means they don't do it anymore. And look at this little number right here. $1 billion.
Uh-oh.
So that's why their PE is so low.
Wait a minute now.
So, guys, you got to take that billion out. So they basically lost like $20 million. So we can look at the last, we got to take $1 billion out of their last 12 months earnings. So if you take $1 billion out of their trailing 12 months, they've lost $100 million. So it's very, very, very skewed, guys. So even though the technically it is a check, this is why we do more research.
Skewed good or skewed bad?
Skewed bad. Because it has a one-time gain of $1 billion on a division they don't even use it, they don't even have anymore. So they probably sold it off, is my guess. And that's why their revenue is probably down. So it's still a check, technically.
Pillar number 5 is shares outstanding. We want this going down.
50 million, 56 million.
It's going
up. X.
Okay.
Okay.
Current assets over current liabilities.
Current assets are 1.3 billion. Current liabilities are 753 million. So check mark there. Plenty of money on hand to pay off their current liabilities.
How about free cash flow growth over the past 5 years, Paul? Pillar number 7.
All right, this is going to be the big mamma jamma. When it comes to inconsistent earnings, like I've told people, the free cash flow statement will help you a lot better. The free cash flow statement will tell you a lot more about how they're generating it's cash from operations, less capital expenditures. So how is their business generating cash flow? So 5 years. You ready, Seth?
I'm ready. Go ahead.
Negative 106.
Uh-oh.
And then a positive 12. So it's a check mark there.
Oh, boy.
But then we have 123, 76, negative 43.
Oh, boy.
Do they even have cash flow?
Yeah, divided by 5, it's a 33 a year.
Negative 106.
You said plus 76, right? So we're at 200.
Yeah.
So we have
200 minus 106 minus 43 plus 12. Oh yeah, you're right. About 33 million a year. Mm-hmm. Is that about right? Yeah, it's $33 million a year. Guys, times at 20, and the reason we picked 20 is we want the PE less than 20, so we want the free cash flow less than 20. Your job afterwards is to determine what's the proper free cash flow multiple based on growth and other factors like stability of the company, et cetera. We just want to keep it consistent with earnings, so 660 million. What's it currently selling for, Uncle Seth?
1.6 billion.
So that's a big fat X. And be honest with you guys, this is too inconsistent of cash flow for me. I don't like this. I don't like this cash flow. This is way too inconsistent. I'm avoiding this right now. And this is an example, by the way, but here's the deal. If you pick the little black book, the little book that beats the market,
Yes.
your job is not to do the 8 pillars and pick and choose which ones you do and which you don't do. You do it, you stick to it, and you do it right over and over and over again, and you don't ask questions.
Yeah, so I bought this stock at $11. It's currently at 26. Let's head over to Dr. Momentum Mo. Trader Mo is going to tell you what's going on with Unisys.
So this is a perfect example of how trading and value investing are different. Since October, I mean, Seth just said, we were down here, and this thing has gone up over 100% to where it is today. So I really want to, I'm happy that we're looking at this because I talk about this sweet spot area between 32 and 80% where you're going to make the most of your money. We made that right here in this October-November area. And then what I always say is in my videos is what we did was go sideways. We were over this 80% line, just going sideways. What does sideways mean? Over 80%. We're in the overbought region. Overbought means that the likelihood of the stock turning down on you is higher. Doesn't mean that it's going to happen. As we can see here, this happened we're going sideways for several months, and the stock just keeps going higher and higher. I'm willing to bet that this is what we consider a power stock too. We're over all 4 of our major moving averages, 25, 50, 100-day, and 200-day. So if you want to do something with this, you've kind of missed a heck of a run here, but today we're getting a great engulfing candlestick that's taking out yesterday. If you wanted to, I think it's perfectly fine to go ahead and buy today. But just know that this is more of a risk-on trade because your trend is starting to slowly trickle down below 80%. But if you want to do it, go for it. So it's on you guys.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. Yep. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. Yeah. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. This is your chance to get serious about investing. Yep. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.